Hey everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so we can better understand it tomorrow. And today, we're taking a look at the Nasdaq. Now, the Nasdaq, along with all of the index markets, have had a really good bullish rally up today, with not really a whole lot of stopping. We can see behind the scenes here, the S&P hasn't stopped going up either. Just a lot of bullishness going across the board. The Nasdaq was one of the better examples, though, which is why I wanted to dig into this one, because in this type of scenario, looking at this point in time, we started getting a little bit of a dip lower. And during that period of time, we had a dip lower, but if we look at the other index markets, the S&P is making new highs, the Dow is making new highs, the Russell is making new highs, the Nasdaq isn't, right? It's lagging behind. Now, sometimes that does happen with the Nasdaq because it's got its feet in a lot of technological side of things in terms of stocks and all that. So it can have some different variances. If, you know, the CEO of Apple says something, it could throw it around a little bit. But aside from that, for the most part, it's going to follow along with its kind of partners in crime, right? So when we have this bullish rally going up, all of the other index markets are going higher. There's nothing happening that should be causing the Nasdaq to dip down. We have a type of correlation that we can use to our advantage. Now, an aggressive correlation type trader is just going to buy at the market and hope for the best. That's one way to do it. But another way to do it is just going in and looking for reasons to jump in, and then going in that direction for completion, right? Looking for them to go back to the highs and finish the job. In this case, we have a humongous bull breakout to the upside, and it stops dead in its tracks. Not a good sign for the buyers. Buyers obviously are not interested in buying high. They want to buy low. They want to buy at a cheap price, and they're obviously not seeing this as cheap, which means that the market's probably going to pull back. Pulls back a little ways here. Buyers start coming in through here. It just pokes its head through high and slams to the downside. Now we're starting to get some cheap prices. We come to the bottom of where that spike started, and this is the area of interest because where the spike started, that's where all of the buyers stepped up to the plate in the first place. Now that we're back, what are they going to do? Are they going to defend their positions? Are they going to hold off a little bit? Right? What are they thinking when we start coming back towards our original entry point? Big bear candle slams through. Buyers try to come in, but not the most convincing candle in the world. But then it follows it up with a huge bull bar closing back up. And now we have a twin reversal with a one candle distance gap, right? The one candle in the middle just kind of null and void. Basically, these two candles are the twin reversals. So a big reversal signal right back to the upside, allowing the buyers to slam the market up, and that allowed for that first buying opportunity of the day to go in the direction of that correlation. We then have a one candle pullback into a big breakout to the upside, another reason to become a buyer. But again, every time that we've come up here, the buyers haven't really found much interest. They're trying to buy cheap. So there is a buying opportunity above this looking for completion, but there's not a ton of room. Looking at the highs, you're buying here, your stop would have to go way down here. This is a horrendous risk reward, right? That's not the kind of thing that you're looking for. Instead, what you're looking for is to wait for a little bit of a pullback. We have a reason that the buyers are going to want to come in. They pull back, that is your buying opportunity to jump in because now your entry point is there, your stop is at the low, and your target is back to the highs. And now you have a good risk reward. So playing along with that risk reward scenario is seemingly what everybody else did because it popped right back up to the highs and finished off the job to a new high, completing that correlation to the upside. And a pretty good day on the Nasdaq overall. It kind of lagging behind the other ones, but it did catch up, gave some beautiful opportunities to the upside if you took them. And overall, there's a lot to learn from this kind of scenario. So hopefully you learned something. Hopefully you found it useful, maybe a little bit interesting, entertaining, and we'll see you next time.